So hello, hi, welcome everyone. Thanks for joining. We are talking today about tales of money and terror. So it's Halloween, yes, very scary, spooky, and we are going to be talking about some of the things that have happened in traditional finance that kind of led us to cryptocurrency being an option that a lot of people felt like they needed. So let's start with intros. I'm Jessica Lebeck. I am the executive director at C4, and I'm really excited about this talk today because we spend so much time talking about issues in crypto, but this is kind of bringing it back to why we're all interested in this technology to begin with. So let's do intros from our committee. Rodney, do you want to start?
Sure. My name is Rodney McInnes. I am the CRO and AML compliance ninja at our compliance group, and I am the current chair of the CBP committee.
And I
Awesome.
am Dirk Anderson, and I am the founder of Imagine Crypto Consulting and also on the CBP committee and the chair of the Cryptocurrency Security Standard Guidance Committee.
Awesome. We've got a lean crew today, but we've got some good stories. We had some community feedback about issues that other people have experienced in TradFi as well. So I'm excited. Let's get started by talking about what brought us here to begin with. So we know that traditional banking has issues. That is not unheard of. But if you're watching this, you've probably noticed that we've spent so much time talking about like scams, crypto hacks, all of these things, but we haven't done anything in a while to bring us back to the basics. And as it's Halloween and we generally do something spooky, we thought, well, what's spookier than the entire traditional banking system suddenly collapsing in your country, or being unable to withdraw your money because of some different issue. So we know that the control is in these third parties or governments. And let's talk a little bit about what happened in 2008 that brought about Bitcoin. So let's discuss what is known as the Great Recession. Now, because it's somewhat not that distant past, the terminology for this, different places call it different things, but basically the economy was having a very big problem, and it started and then it spread further and further across the globe, basically. So I'm from the US, so I remember it as a housing crisis, but it definitely depends on where you're from and how you experienced it. Rodney, you were saying before this call that you didn't experience it in the same way because you're in Canada.
Not necessarily. I just don't think I followed it quite in the same way because it was a lot of, I mean, being America's hat or America being Canada's pants, however you want to look at it. We see a lot of different perspectives of what happened, what the cause was. I mean, anything news related is always a struggle to find like the correct, proper, unslanted opinion of truth of what happened. And I mean, now looking back a long time on, which is kind of terrifying to think about. We now have a lot more insight into what occurred, and it was just like seemingly, from my perspective, a calamity of errors. So it's not that it didn't have an impact in Canada. I think it had a different impact in Canada, where it was less a housing crisis and more of a lot of like tangentially connected pieces. But ultimately, we definitely felt it here too.
That makes sense. And
And
also,
I
like
think
personally, I
that
think everyone
part of the
individually
problem,
heard.
right, was that was part of the problem was that it maybe the trigger was all of these bad bundled mortgage loans in the U.S. that caused such a massive ripple effect in the banking here and banking failures, and but um because the US dollar is such a can have such an impact on other economies being traded, and the ripple effect of that I think spread out to a lot of places that weren't directly involved in the initial the root causes of it.
Yeah. And when we both started talking over each other because we've got a slight lag, the three of us are in different countries right now, which I think is kind of fun because we're talking about a a global technology and global issues. So it's kind of perfect. All right. So I don't know about you guys, but I grew up always hearing about the Great Depression and like my grandparents, how it impacted them in the US, and like to then live through it on my own and seeing how it impacted people in a different way, like actually being around for it. Before this call, I was telling Rodney and Dirk that my big memory from the 2008 and then to 2009 crisis was a friend of mine who quit his accounting job and decided to go and save sea turtles in Costa Rica. And the economy was great when he decided to do this. It seemed like, you know, a fun way and to get out and experience life. And then he was going to come back, get another accounting job and move on. But by the time that he had returned, the market had crashed and he couldn't find a job for quite a long time. And so it definitely impacted people that I think we all knew, but a bigger impact in it was how, like we brought up the housing crisis, but suddenly people no longer had trust in central banks and fiat currency. It really made a lot of people question what they were putting their money into, how it was being stored, and how they could access it. And with all of these issues, Bitcoin basically came about at a perfect time. So do we want to talk a little bit more about the crisis in 2008, 2009, and the market collapse, or do we feel like that's a good summary and you guys want to go on to, I guess, why it's still relevant and what's happening now with finance and traditional banking?
I think that's worth like, yeah, just kind of maybe like, just putting some extra emphasis on the social impact of that, right? I think probably, I mean, we had the what were they called? The 1% or the what? Like we had the protests on
Yeah,
Wall Street, like the mass
1%.
campouts on Wall Street stuff, because of exactly the sort of thing you were talking about, right? People not being able to find jobs. Um, I think in a large part, I mean, the technology played a big role in this as well, but the entire gig economy as we know it, right, kind of came out of that as well, right? Because businesses, were forced to cut back, and then, like always in many ways, right? You raise the price on something, you never lower the price on something, right? After the fact, right? You cut back and discover you can still make the business run. You don't go out and like, hire people to make life easier on the employees who stayed. You just keep like pushing along. And so all of that drove I think a lot of like bigger picture social unrest stuff that kind of fed into the creation of the creation of Bitcoin and everything that has come out of that since.
Pop quiz. What was the snippet on the cover of the paper that was in the Genesis block?
I know. Well, I can't quote it exactly.
Chancellor bails out.
Go ahead, Dirk.
The Chancellor bails out. Yeah.
A chancellor on the
Chancellor of the
brink.
Exchequer bails. Yeah. Like,
Yeah, chance on the brink of bailout.
again. Yeah.
So
Yeah.
why
Not
don't we,
on not on the CBP quiz, just for clarity.
yeah, no, it's not on the CBP, but I think it's very interesting how we can't say that Bitcoin materialized out of anything. We know there's a lot of different technologies, but also we can't say that it just happened because somebody just thought it would be fun to be able to use digital money peer to peer. This is a long time coming, but then it was kind of perfect timing for a lot of people who needed a different option. They no longer trusted in the financial system. We saw this in Cyprus and Greece. This has happened in Argentina. It's happened all over the world, basically. I think a lot of people in the US grew up thinking it could never happen here or there couldn't be a problem. And so it's like, oh, this happened to my grandparents or my great grandparents. And then suddenly it no longer was that. And so we then go into this new technology, Bitcoin, and the printing, not the printing of it, the printing of it, the imprinting of Chancellor on the brink of bailout. And that happened in 2009, January 3rd, 2009, which is when the first block was mined.
Which was funny because I said that without reading our little notes that we have, realizing that you had actually specifically written that in there. So it's kind of funny.
And I forgot I had specifically written it in there. So when you said it, I was like, I can never remember what this is, forgetting that I had actually put it into the document. So,
This is how
yeah.
coordinated we are.
Hey, it just shows there's so much information related to this. Doing like a little research ahead of time, I was realizing how the numbers and all the info kind of falls aside once you realize, okay, this is a huge problem, but it's hard to go back and spot exactly what led us to this. It just feels like an overall cluster of.
Which is a interesting thought experiment in that no one spun Bitcoin up between 2007 and mid 2008. That's impossible.
Right.
Like that's got to had a long tail on the creation and all the effort that went into developing such a complex infrastructure. So to your point, I think the timing of it is really fascinating, and I kind of wonder of like, was it sitting on the shelf waiting to deploy at a
Mm.
time when it was like everyone was watching and you could kind of drop it to the world to be like, here you go, happy birthday? Or was it just a fluke? Like it's one of those, we'll never know. But looking backwards, what was there something similar that set this off, either in a local jurisdiction, on a more broader scale, like personally within Satoshi's life? Like there's so many variables that it could, it could really be anything. But
Mhm.
the timeline is always one that got me of like I always really wonder of how long did it sit there before it got deployed or was ready to deploy, or was the time to deploy, versus is that just happenstance that was just like perfect timing?
That's such an interesting point, Rodney. See, this is why you're our chair. Like, yeah, it didn't, we know it didn't materialize out of anything. Something happened. And like, was it choice? Was there a timing? How long? Because we know that Adam Back's hash cash came out I just Googled it in 1997, which is one of the precursors to Bitcoin. Um, and then when did Szabo's, what's it called? BitGold come out? Let me see. I'm just going to look this up real quick. 1998. So a lot of the things that preceded Bitcoin that led to it happened or were happening like 10 years. So yeah. Dirk, do you have
Yeah.
thoughts on that?
No, I think that's just really interesting as well, right? I mean, those were experiments in trying to achieve some of the same goals, right? That Bitcoin wound up achieving, but they, the reason that they're not still around and Bitcoin is, over a decade later, is that they didn't solve some of the fundamental problems around consensus and transparency
Mhm.
and um, that Bitcoin did, right? And yeah, I do think it's an interesting question though, right? Like, I mean, what was the state of the Bitcoin white paper before the collapse, right? I mean, obviously there
Yeah.
were attempts being made at these things. There was, the conversations going on online, and so yeah, I'm sure there are folks out there that probably know a great deal more about that part of it than we do. But it's interesting to think about that we generally just talk about this one, really big scary story of 2008 being the impetus for everything that happened. But we know that people were trying to solve some of these problems, and there certainly have been people for a very, very long time who don't like the traditional finance system and the banking system. People like Mojo Nixon, right, who sang "I Hate Banks." So, and that was in what, early 80s, maybe he recorded that song. I don't know, late 70s, early 80s that song came out. So,
I don't know that song
he,
and I'm Googling it. I'm going to search
yeah,
it up to put it
it's a
in.
fabulous song to listen to. Um, but yeah, I mean, people, this wasn't anything new. Money and banking and finance have, have had problems since Templars started writing IOUs for pilgrims to the Holy Land. So there have been issues with it, and I think that's what's interesting, right? When we start talking about kind of like some of the like ways that it actually directly impacts us and the people that tune into our calls, right? We all have our horror stories with money.
Yeah, which is a perfect segue into talking about some of those horror stories. So I think it's easy when we think about like as, oh, there were thousands or hundreds of thousands or millions of people impacted by this. But when we pull out the specific stories of how traditional finance can be problematic, it feels a lot more real because it becomes personal, which is what we wanted to do today. That was a little history. You can obviously read more about it, but from a personal perspective, everyone on this call has experienced a challenge with traditional banking. And we put some information out on our social media and asked for additional stories from people about some of the challenges they've had as well. So we're going to go back and forth, share some of the things that we've heard other people talk about and some of our personal stories as well to give an idea of why we're so passionate about this and to set the scene for why I guess we all love Bitcoin so much. My dog's whining. I think he has opinions on traditional banking as well. So, Dirk, do you want to get started with one of your stories? I think you put in here you wanted to talk a little bit
Sure.
about something that happened in Scotland.
Yeah. So, apologies for any kind of lag. I'm in Scotland right now. Like to spend some time here every year when possible. Just kind of one of my favorite places. And um, we have worked with the same letting agency over here in the past to find us different places to stay when we're here for a while. And just, in the horror story realm of traditional finance, one of the big challenges was we did it the first time and um, made a large deposit in addition to paying in advance, and we kind of had to jump through some hoops to get the money wired over here. And I mean, and this is I'm not talking about like the 1980s or something here right now, right? I'm talking about like 2003. Um, and had to jump through hoops to get our payments over here because we bank at a credit union, which doesn't have a direct Swift routing ID. So we had to use a third-party app online to connect to Swift in order to be able to like make our payments. And then when we tried to get our deposit back, they couldn't do it. They like tried to do it. It bounced twice every time a fee came out of it. They could not go back through the same like routing in reverse to our credit union, and we wound up just telling them to. We knew we were coming back, so we wound up just having to be like, just keep the deposit, which was like, it wasn't like crazy money or anything, but still like $500 or something. We're just like we can't get that money back, and every time we try, we're losing some of it. So we know we're going to be coming back over. Just hold on to it until we make our next rental. So, in that sense, it kind of turned out okay for us. But just the very fact that to like make a payment from again, we use a credit union as opposed to a bank because we like being members versus customers, and that that there just wasn't the setup. We had to go through Wise, I think it's called, which is a like online banking routing sort of program, and in order to get that payment over, and could never get our money back. And so that, yeah, we just one example of the kinds of, problems that today in, the 2020s exist in the, interconnectedness of the banking system.
Yeah, you'd think that it wouldn't
Not to
be.
mention just the fees that we had to pay to send the money in the first place.
Mhm.
Sorry, Jess.
No, I was going to say you'd think that this wasn't such a big problem, but the part about not being able to access the funds or losing it. I mean, $500 is a lot of money, and if we think about people who've lost money in crypto and we focus on that. Well, the same thing is happening, or it's being held up, it's being stopped somewhere. And sometimes because of the lack of transparency, we don't even know where it is or what happened to it. I've heard similar stories with people making payments across countries and being unable to even locate where the money went through the institution that they talked to about this. And so it seems like that wouldn't happen, but it does, and you can't go on a blockchain explorer and check and see if it's waiting or what's going on. So the lack of transparency is a huge
It's actually kind of
problem.
when you look at international bank wires, right? And they're like, okay, and make sure you put this information in the memo line, right? Because it's just going to one big generic pile of money at the bank you're sending it to, and then there's somebody over there is literally sorting it out based on account numbers and comments in the memo line on international bank wires, right? And this is how in 2020 international banking works. Or, you know, you could send some Bitcoin or some USDC or whatever, and be like, 10 minutes later, they've got it, it's confirmed, and everything's taken care of. And you saw it, like to your point, Jess, you watched it the whole time.
Mm-hmm. Yeah. All right, that was a good one. Rodney, do you want to do a story or do you want me to?
No, I can, because you've kind of segued into
Yeah.
our story very easily. So we used to have a US partner who did compliance work in the US, and for projects where there was connectedness between the Canadian and the US entities, sometimes we would take payment in Canada for, a Canadian client doing work in the US and stuff like that. But at some point we would have to settle up and pay our US partner. Um, so one time, and I'm in Toronto. So for any non-Canadians, Toronto is the center of the universe in Canada. Sorry to every other Canadian watching this. Um,
It's also an awesome city. I love Toronto.
Thank you. There are tons of awesome cities in Canada. This one just happens to be the most important. Um, and then our US partner was in New York, which gonna say New York is a pretty important economical power within the US. So two places in the respective countries that have most of the finance, or a large portion of the finance at least. And we were settling up a payment that was not astronomical, but not a small amount, enough that it was important that it arrived and didn't get lost, which is exactly what happened. So using a large financial institution, sending to an even an exponentially larger US institution, that oddly is the sister company of one of them. So the big one owns the little one, and they're doing an interchange within themselves, and they lost the wire. And so now our US partner is messaging us being like, hey, I haven't heard or seen anything. What's happening? Or we submitted that a week ago. You should, they said it would take a long time, which we're used to, but it shouldn't be this long. So we contact the bank. The bank's like, let us get back to you. 3 days now goes by again, radio silence. Nobody says anything. So we reach back out and we're like, hey, what's happening? We just want to know what's up so we can figure it out. And they're like, oh, well, hang on for a second. And we get transferred to some supervisor. Supervisor comes on and is like, so I'm not sure what happened, but it seems that we've lost your wire. I'm like, okay, that's fine. You have a lot of money. I'm sure you can cover, this small transaction to figure out how to get it to your own entity. And we're working on that. It's a bit of a process. Please, please stick with us, and we'll know that trust will figure it out. And we're like, okay, fine. So after 3 weeks went by, so 3 weeks total at this point, start to finish, we reach back out and we're like, can we cancel the wire because this is ridiculous? And they're like, well, if we do that, there's a fee associated with it. I'm like, whoa, 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 whoa. You lost your own transaction and are now going to charge me to undo the transaction that you're not even capable of doing. So we got on a call with our US partner. We're like, hey, why don't we just pay you in Bitcoin? It's way easier. we can have it to you in 10 minutes. Deduct the exchange fee to cash it out from like whatever the total is, and we'll keep a balance to make sure that you're not paying for it, that the company is paying for it, you get blah blah. She was like, fantastic, you actually read my mind. That's what I was going to suggest. While we were discussing it, I've already set up an account somewhere that I can get that sorted. So from our conversation to the transaction taking place, to the exchange occurring, to the money being in her bank account was about 5 hours, 4 hours, something like that. And that was mainly like the biggest weight was between the exchange where she cashed it out and getting to her bank account. And that's only because it was a large amount. When we did it with smaller amounts, it was less than an hour. So the trust is really difficult, and we never did another bank settlement. Everything got settled in Bitcoin from then on.
It's interesting, as you were saying that, Rodney, I had so many stories pop into my head of issues we've had with payments that hadn't occurred to me as we're talking about this. It's like they're so plentiful that it didn't even like pop in, but I was thinking, oh yeah, that time that we had to pay that contractor in the US out of our Canada account because he didn't want crypto, and the whole thing going through the credit union, bank to credit union, international. It was a complete mess. And like that, I mean, just so many different things like that popping up. And then the same thing, well, the solution is very simple. It's Bitcoin.
Can you imagine having a product and selling it to somebody and being like, they're like, I want to buy your widget. We're like, perfect. We're going to ship you your widget. And they reach out and we're like, where's my widget? And we're like, I don't know, I lost it. And they're like, okay, well, give me my money back. Well, in order to do that, we're going to take $50 off for restocking fees and things like that. Like,
yeah.
you lose your mind. But for a bank, no problem. It's just what the policy says. I'm just doing my job.
When we've become like accustomed to it being the norm, and so we accept it, we're frustrated, but we accept it. So if there isn't that alternative, there's not much you can do. But even now, I mean, I constantly deal with payments where it would be a lot easier in crypto, but for whatever reason, someone would prefer to pay in fiat. And then eventually, sometimes why am I doing this? They'll get frustrated enough to decide to change how they're paying for things. Yeah.
And what's funny sometimes is that it's even crypto companies, like you'll be doing business literally with a crypto company and they want to pay you by like, ACH or Bankwire, and you're like,
that happens a lot.
What?
I can't get into that one too deep. We offer a discount if you pay with crypto because we're like, take all your Bitcoin. And the amount of Bitcoin payments we've taken over the years is very small. For sure.
I offer a discount. They still want to ACH me. So.
One of the things that you were talking about reminded me of a story that someone in the community was talking about. Not really a story, more of the idea of banking, and this idea of like we might know that it's not the best option, but we're so used to it. And part of that is what this person called the pageantry of banking, which I found very interesting as they were explaining this. This idea that you go in and let's say you need to open a business account. I don't know how it is elsewhere, but at least in the US, I can picture going in, saying you need to set up a bank or a business account. They move you to either a cubicle or a back office. Somebody else kind of whisks in to help you with it. It's like this orchestration of all this stuff. And they're like, well, can I offer you some water? Or would you like to see here? And it's like, I just want the bank account. I did not come here for your bottled water or for your mints or to have a conversation. Like I just, it's a business account. Let's set up the account. And you might think that it wouldn't take that long. It takes so long to set up an account. And so when this person was talking about that, the word pageantry, it's so true. It's a performance. There's so much to it that exists when it could be very simple. And that's part of what we're paying for. I mean, we look at all the brick and mortar buildings all over the place. Like driving down the street, I'm in Chicago, you drive down the street, you're going to pass a bank within a block or two. So it is, this performance of money. So anyways, thank you to the person who shared that, because I feel like that's going to stick with me, and this idea of how we go about it. It seems very like fancy and like, yeah, but then it's not, it's terrible. It's like the Oz behind the curtain. Okay.
And you
Should,
can, people say, sorry, people will say, well, I mean, you have to go through these like processes because you have to do like all the like, know your customer stuff and, make sure that like, but like the legitimate crypto places are all doing that as well. And they're all doing it in 10, 15 minutes online, right? And then it's done.
somebody just put in to the chat, when I send wire transfers, I just assume it will take 2 to 3 business days to process plus $20 fee on top. And I think that's exactly what we're saying. We're used to it. We just assume that it's going to be a pain, but then sometimes it's more than that. It doesn't actually just take 2 to 3 days or
It's
$20.
just like, this person has so much faith in their institution. That's supposed to.
Mm-hmm.
And
Yeah.
like, it has been getting better, I will say. So this was, I mean, this would have been 2014 or 2015 when that happened in my story.
Well, I have another interesting story
But why is
from,
it better?
what'd you
They've
say, Dirk?
moved
Why
it
is it
a
getting better?
Why is it getting better? It's moved
I
a
said, why
little
is it
more
getting better?
digital
Probably because
native.
there's alternatives that are forcing it.
That's a good point. That's a
Touche.
good point. Um, so fun story about C4. When we first started in 2013, it was in 2014 that we were trying, I mean, I wasn't here for it, but the co-founders have told me about this, trying to get everything set up and get a bank account in place was a huge problem, because our name, C4, officially is the Cryptocurrency Certification Consortium. We're a nonprofit, everything's above board, but the second the word cryptocurrency was put into the title of the name of the organization, it became problematic for getting a account, because, or a traditional bank account, because of all of the issues surrounding cryptocurrency. If you've got cryptocurrency in your name, you must be an exchange. So anyways, went through all this stuff, finally got a bank account set up, and we got a donation from Deloitte and was sent to the bank account. Things seemed great. Immediately, the bank froze it. So we're talking about Deloitte. This isn't like some random crypto company that's trying to get its feet in. This is Deloitte. Deloitte sent a donation to C4 and it was stuck for months and couldn't be used for what the intended original purpose was of the donation. This was a very long time ago, and yet it's still something that's coming up, that's an issue with traditional banking and cryptocurrency needing to meet in some way, in it being problematic because of the terminology or the name or whatever. So yes, C4 didn't get a bank account for a number of months, and once we did, like one of our first donations was stuck for a long time. So I feel like that just kind of proved the point immediately to the co-founders of why it was important to teach people how this technology worked. It's a good way to set it up. Okay, so that's another story. That's kind of further back. Do you want to talk a little bit about what happened at Salt, Dirk?
Yeah, so I mean, most people know I used to work at Salt, and nothing, confidential or private here, but in after the madness of the call it choke point 2.0 if you want to, but when they shut down what Silicon Valley Bank and what were the other ones? Shut down, well, basically they shut down all the banks that were working with crypto companies that actually would give you an account as a crypto company, right? So what Salt does is they're a lender. You have Bitcoin or Ethereum, you want to borrow against it, right? They provide liquidity through lending against your digital assets. And the problem is that the whole point is people like have these digital assets and they need to buy something. So they need fiat, they need cash, they need, traditional banking access and money. And um, so not only did it just, create for all sorts of right, Silvergate and Signature, thank you, Jess. Not only did it create just banking issues for the businesses themselves, but like you basically wound up having to distribute loans in stablecoin, and then the borrower had to go figure out how to convert that to the fiat that they actually needed themselves in order to do what they needed to do, because there were no connectivity for being able to do those things. And
Um,
I think that the one point I want to make there, about that and about the story you were just telling, Jess, right? Because it's easy to say, well, that sounds like it's really a crypto problem, right? Like, but the fundamental issue, the core issue there is the centralization around the banking system, right? Which the whole point of the centralization around the banking system is it's supposed to give you the ability to do things like send a wire between us, two banks, especially two banks where one owns the other one, and that should be something that could be done quick and easily and fast and reliably. And as Rodney was just, telling us, that's not the case. So you've got this centralization that allows for the creation of these roadblocks when there's anything that you don't like, right? I remember back in 2008, if you wanted to buy Bitcoin, you could not do it with money from your Wells Fargo account. Wells Fargo would block access, Wells Fargo bank cards, and they got over that eventually. But yeah, like if you tried to wire money to one of the exchanges to Coinbase or something like that, it would be blocked. They wouldn't allow that to happen.
What
Um,
Bitcoin
and
were you buying
so
in 2008? I think you meant earlier days.
what what's that?
Sorry, you said you were buying Bitcoin in
Sorry,
2008. I was very confused.
not 2008, 2018. Sorry.
I
well,
thought you
yeah,
knew something I
you
didn't know.
almost just found out who Satoshi
Missing
was.
a digit there. Yeah. Yeah. No, it would have been really hard to buy it in 2008. Yeah. No, 2018. Uh, um, so, so after, like, even the issues that Jess was having, with C4, right? But 2018, yeah,
Mhm.
you couldn't use your account with your money in it to do to buy something that was perfectly legal that you wanted to do, because of the centralization. And I think that's the important, like, kind of takeaway from those sorts of stories, right? Is not that, because it's easy to look at it and say, well, they shut down those banks because of, because they were dealing with like crypto firms that might have been like, except that it turns out they weren't, but that's okay. um so
I
I'm done
think,
harping.
well, what I kind of want to get at is a lot of what we've been talking about have been issues, like you pointed out, Rodney, between crypto and traditional banking. But even like cutting out, well, except for Dirk, you shared that story as well. But like if you cut out crypto entirely from the equation, these problems don't disappear. It's an additional problem that a lot of us have experienced because we're in crypto. But even people that have nothing to do with cryptocurrency experience banking issues. And so one of the things that somebody shared was the cost for having an account. So there's all different issues in terms of the charge for like an ATM fee. You're getting your own money out. I recently was somewhere where I needed to get cash out and I got charged twice. The bank and the ATM. I don't know. Yeah, I don't normally get charged twice, but I got charged two fees to get my own money. And I think it ended up being like $7 to take out like $20. So that was frustrating, which is, I guess, why most of us don't use cash anymore. But so, yeah, the charge to get your own money, and it's not necessarily just a charge to transfer it. There's additional things that come on top of it. And so what somebody was talking about was like if they put out that if they said you're literally paying to interact with your own funds. And so the one of the other things they talked about is like you have to have a minimum balance in your account. And if you don't, you can get charged for the minimum balance. So like if you've got account that you have to keep $100 in, and you go down to $96, and then they charge a fee for being under the amount every month, eventually your account will be drained because of the fees for being underneath it, and then the account closes. And this actually
Oh,
happens.
it's worse than that. Then they start charging. It's worse than that. Then they start charging you overdraft fees because now that you've like account balance is negative because they went through a fine that took it actually under zero, and now you're getting charged overdraft fees on top of it as well. Um, but no, you just made me think of something else, right? Like, I mean, just in the world of like, traditional finance horror stories, um, as I mentioned, I'm in Scotland. My credit union account is in the United States. If I want to withdraw money from an ATM here, like half of the ATMs charge conversion fees, right? They're gonna charge put a conversion fee on top of like whatever happens on the back end with my bank. And and they're like 15%. Like literally 15%, right? They're going to charge you to convert US dollars into British pounds.
When you're talking about like, getting access to your own money, and we're just gonna compound on top of that to make it even worse, is while they're holding your money, they're making money off of it and not sharing any of it with you, which is, like such a great business model from a profit and capitalism perspective. But as a human, like, I don't know, if I'm putting in a certain amount, I should get a certain cut of that. Maybe I should start a bank.
I, I think we need to go back to calling it usury instead of interest, right? Because that's what it was called in the old days, and was usury. And it's like, yeah, you're just using my money for your benefit and not mine.
Mm-hmm. Another story somebody wrote in about that connects to this, or they didn't write in, they sent info about, was in sub-Saharan Africa. This person was trying to create a business there, and in order to get a business loan there, I don't know what country it was. I didn't specifically ask for more information. I don't think they said, but it's definitely in sub-Sahara. They had an issue with a startup because they don't use traditional credit scoring there. And in order to get a business loan, you need to have collateral. So you either need to have a house or land or something in order to do that. And the rates that they said it was 14% rate for a loan, even for having collateral to get a business loan. So if you think about that, the likelihood of being able to start a business, to be able to get, I mean, the startup funds, even just for that, and it can go up to 25%, is, I mean, that's astronomical. And it really impacts innovation and growth, because if you have people who can't start businesses because of all of the hurdles, then you're not getting these new companies to get started, because it's kind of that same thing about the rich getting richer, the poor getting poorer, which was your point earlier, Dirk, about Occupy Wall Street, and that we are the 99%. And in the US, it was a big push about how, the 1% of people have most of the wealth. And this just goes back to it. If you're trying to start a company and you don't have enough money, there's all these hoops to jump through and hurdles to be even able to get there, which, I don't know, it sucks. It really sucks. And this is when we see the frustration of people, and then they go to crypto or Bitcoin, and sometimes they do it without fully understanding what they're getting into because of that desperation. And I think desperation is really scary, and it does cause a lot of bigger systemic human issues beyond just the money side of things, because it infiltrates all parts of our lives. Now I'm going on a rant.
And there absolutely are people in the crypto space who will take advantage of that desperation, right? We've seen that, and
Yeah.
those are the stories we talk about so often, which is why, I mean, I'm feeling like I'm coming across as a total crypto anarchist, which I'm not actually generally, but it's fun to bash the banks every once in a while. But the but like along those same lines, just uh, the people who are still unbanked, right? I mean, there's still issues with um, uh, people in large parts of the world that simply don't have access to a bank account. So, and you run into that problem of sending money home, right? Like you have people who come to the U.S. or Britain or Europe or whatever, do it completely legally, right? I don't even want to go anywhere near any issues like that, right? They go through proper immigration channels. They come here, they get a job, and they want to send money back to their family at home. And the only way to do it is through their family doesn't have a bank, so they have to use some sort of money sender, money exchange sort of program, and those all charge double-digit percentage fees as well, right? To be able to send money to someone. So you lose so much of the work that you do in order to be able to do something that should be fundamentally easy, like send your mom some money, right?
And when you look at jurisdictions that, a large portion of their GDP is remittance. So like Philippines, Sri Lanka, India, like a lot of these countries, a large portion of what keeps the country going is people in other jurisdictions sending them money. The Philippines is such a huge one, and I've worked with so many, MSBs in Canada and things like that that do Filipino remittance. And when you're doing the analysis, so part of my job is to do like a compliance audit, so to make sure you're following the rules and that your program's functioning as it should. And I'm looking through transactions, and I'm not kidding. The average transactions are usually between $50 and $100. Well, if you're dealing with a bank, I mean, even at $20, even at $20, that's 20% of what you are paying without even including any of the other fees and costs and everything else. Typically, it's higher than that. So, I mean, then you get into if you're only sending $50 and you're paying 20, now it's 40%. So, like, it very quickly starts to multiply and spiral out of control in the places where it really, you really can't afford the fees associated with that. But there are people literally on the other end depending on that support. And that's always been one of the really frustrating parts. And I've seen some really glorious, um, businesses and ideas and a way like things are facilitated. I remember for a while, I don't know if it still exists, but for a while in the Philippines, you could basically go up to a bank machine and pay Bitcoin into it, and it would spit cash out. And it was through a company that had set up there. Obviously, there's going to be fees attached to it and everything else, but like what a neat solution to go from you know fiat in Canada to cash in hand in the Philippines. Like it was amazing.
Yeah, our video editors in the Philippines, and so we've had, ongoing things with sending there and whatnot, and the exchange rate and all of that. But yeah, you're right. A lot of people in other countries get paid through. I mean, I'm paying him through C4, which is Canada. Like we've got a lot of things going on, but sending in crypto makes it a lot easier for sure. Um, as you were talking, I was just looking up. I forgot I did this a couple weeks ago. So I'm going to show you a large stack of cash. This is Argentinian pesos. So it looks like a lot, a lot, a lot. This just goes to show inflation. So I was thinking recently, I was like, I got to exchange this. I've been waiting and haven't done it. So I finally looked up how much it was. This, I've got more. All of this is less than 20 US dollars.
I was in Egypt last summer. Egypt limits all of their bills to like 1,000 Egyptian pounds or something like that, or 5,000 Egyptian pounds. The bills are also all like a lot of them are really old. Um, but a folded stack that I could barely get my hands around was like I don't remember the exact amount and I don't want to guess, but it was a surprisingly little amount to, you see the pictures of like when Venezuela hit their hyperinflation and stuff for people. I mean, they're now making purses out of the money because it's worth more than the actual money itself. It was a similar scenario of the like carrying around this ginormous wad of bills so that you could pay for dinner was baffling and difficult. And
Yeah.
like not scary, but like intimidating, because it seems like you're walking around with this giant wad of cash, which looks like you have a lot of money, but I'm sure locals are used to that just being the norm. But for me, having like a stack of bills like this was
Yeah.
very odd.
Well, and it says a lot about inflation, right? That it used to not be a massive stack of, you wouldn't need that many of the bills. And this is a 1,000 pesos. So each of these. And so they do go up much higher, but it's just interesting to think that this much is not. And so then going back to like the exchange and the cost of money, to think, oh, I'm going to go in and exchange this. I don't know what the cost would be, but the exchange, it doesn't really make a lot of sense to do that. I just guess I have to go back to Argentina. But like, it's just funny. This is sitting on my desk and it looks like I'm very wealthy.
There are
Um,
charities.
mhm.
Usually see them in the airport. I know someone that runs one here in Canada.
Really?
And it's just a bin at the airport where you can take exactly like that, where it's like it's not worth your time and the likelihood of you going back and spending it
Yeah.
and even remembering to bring it. You just drop it in there, they collect it, and then at the end of the year, they consolidate it all and cash it in and then donate all of it. And I'm pretty sure, at least for the one in Canada here, that when they donate it, they take like the currency of whatever and then donate it back to that jurisdiction.
Ooh, I like that. I need to look at it. I'm going to be flying from Chicago to New York for next week. So I'm going to look, maybe I'll bring that large stack with me and I'll look into it. That's good to know. And then you think about that large stack and that's like, you can spend that amount on dinner there. So that just shows the inflation. It's not like it's an exorbitant amount of money there. That was like, that amount would be like a dinner for two people maybe. And so it just shows how inflation is going, and it's kind of scary. Um,
Hyperinflation is one of the scariest fiat stories of all, right? Like
mhm.
when it gets out of control and yeah, all this money that you once had is suddenly worth nothing. That's there's not much scarier than that, right?
I mean, that's
And I
what
remember,
happened in Greece. Yeah, go ahead, Rodney.
well, exactly. Like I remember, when the Venezuela thing really kind of kicked off and Bitcoin existed, the the circle around the outside of the country of the markup on Bitcoin in that area, because so many people were trying to dump their fiat so that they could put it into something, which like
Mhm.
for everyone that's been around long enough, one of the biggest like negative things said about Bitcoin is its wild fluctuations and things, which like I
Mhm.
think we're settling down a little bit, but it still moves quite a bit. Um, the fact that you want to move out of your local fiat currency into something more stable, which is Bitcoin, is a very, very loud statement.
Mhm. That's a really good point. And like, yeah, we've worked with somebody who's in Mexico who I've paid over time, and Bitcoin, even with the ups and downs, is a safer bet. And then USDC is even more preferred. But yeah, it's when you're putting your eggs in the basket of Bitcoin because that's a safer basket, then your government's fiat. That I do think that says a lot. Um, you know, this conversation, it was actually, I'm really enjoying it. This was really fun, but it I think it's a good reminder that no system is perfect. We all obviously love Bitcoin and really believe in cryptocurrency and Bitcoin in particular, for this committee. But we interact with other types of finance where none of us are like, oh, we should only have Bitcoin. Like none of us have bank accounts. That's not the case at all. We're all still living in this traditional system and then also trying to incorporate Bitcoin in. But it's, I don't know, kind of humbling when you think about all of the people in the world dealing with all of these different issues and the frustrations that we feel over banking and the difference between, Afghans having to flee Afghanistan because of the Taliban and having nothing, having no money at all. And that's where the real problem is. And I think that's why all of us got into crypto to begin with. My introduction was somebody who is from Greece, who the currency was devalued basically overnight and his family lost just about everything. And that's the person that started to talk to me about crypto. And so I came at it from the angle of, oh, Bitcoin can improve lives. And I think that's why we all got into this in the first place, if we kind of go back to basics.
Oh,
Yeah,
so long ago.
I know. It really was. It's wild.
Yeah.
It's changed a lot. The industry has changed a lot, and especially in that I'm calling it an industry, whereas before it wasn't anything. And even talking about Bitcoin made you like kind of a freak. And now it still does, but maybe in a different way. I do wonder the people who aren't into crypto, I hope some of them watch this. I know a person in particular I'm going to send this to, but to show their issues on both sides, if we're taking sides, which I don't think we are. And so we need to consider the fact that no financial system is perfect, but we're working towards making things better, more even, more fair, and less annoying. Because I really do think that traditional banking is just, it's annoying. I know that's like not a large scale problem, but it's pretty frustrating when you go to the bank and can't do something basic.
The one thing that we didn't really touch on that I just want to quickly touch on before we go,
Please.
is, and this doesn't get, like, personally, I feel this doesn't get talked about nearly enough, is the payment finality in Bitcoin. That
Okay.
is such a key component to a Bitcoin transaction of, like, if I'm giving somebody something, I know that I'm not going to send it to them and then 3 months later get a chargeback and lose like all of my money, even though my product is gone. That, like, it can't happen. The only way that's going to happen is if they send it back to you, and ask for, to send the product back or whatever. But at a bank, so I've got, and like I've got one right now that's dealing with it. I've had multiples, like way too many to to feel good about over the years, where somebody finds out that I can do a scam. So what I'm going to do is I'm going to sign up and I'm going to send $100 transaction every day. And then after 3 months of sending $100 transaction every day, I'm going to go to my bank and be like, this isn't my money. I didn't do these. I want my money back. And the bank's just going to be like, no problem. And now that MSB is out the money. And then when that starts to grow and word starts to get around, or there's a ring that operates this type of scam, and now you've got 100 people sending $100 every day for 3 months, then charging that back, that's like, it starts to like really grow really quickly. Where in Bitcoin, the finality of that payment is 6 confirmations. It's never going anywhere. I mean, one confirmation, you're gonna have a hard time getting it back either way. So I like, that is one thing that when people, especially business people, are like, tell me why. That's my go-to every single time, because nothing else on earth has that with the exception of cash. And even then, you can run into a situation where you go to put it in your bank and your bank account's gonna be like, you either can't access this, or does this belong to you, or a bunch of other elements. But the payment finality in Bitcoin is like one of the most powerful features, in my opinion.
I totally agree. I totally agree. To be able to send it and to be done, and on either end, and to be able to track that in a transparent way to see, like the other side of it, if I sent you something, Rodney, you can't then say I didn't get it because you clearly did, because I can show that you did. There's no arguing against it. So it's that side of it too. Um, somebody put
And I
in
would just
the,
add to that real quickly. Oh, sorry.
yeah, please.
I was just gonna say I would add to that real quickly, right? Like, you also need to go back and watch our talk that we did probably a couple of years ago now about like being your own bank, right? Because there is a trade-off to some of that, right? I mean, it means payment finality means that you need to know that you're sending your money to the right place and that sort of thing as well, right? So, those are some of the challenges that come along with the crypto space, and I just wanted to touch on real quickly because Rodney, just mentioned scams, right? Um, one of the things we talk a lot about in the crypto world, right? We talk about like, oh, the scams, and like all this money got stolen, and um, uh, it generally hits the news, but not in the same way that crypto does nowadays, right? But these are scary stories that exist across anywhere where there's money, right? I mean, um, banks still get robbed, and they can lose lots of money sometimes. I remember reading about the Bangladesh bank heist in like 2016, which was a Swift hack, and there was an attempt to steal $1 billion. They got away with like 81 million. Right? I mean, that's big money. It's not just crypto that is vulnerable to these things. Big banks are getting nailed all the time and fined massive amounts of money for failures of KYC and anti-money laundering and sending money to known drug organizations and terrorist organizations. And this happens in traditional finance, right? It's really easy to talk about it in the crypto space, but it happens in traditional finance too. And still the biggest Ponzi scheme of all time, right? Bernie Madoff, $64 billion over a decade, right? I mean, that's 10 times OneCoin and BitConnect put together. So it's really easy, to tell the scary stories of crypto, because everybody's tuned into the scary stories of crypto, but all that stuff happens in the world of cash and regular finance as well.
It's also
Mhm.
easy to focus on the other side of like, can be rich,
Yeah.
which you see far too much as well.
Still waiting. Yeah.
100%.
Exactly. This was really fun. This is a good chat. It brought me back to remembering a lot of the reasons why I love Bitcoin, and some other cryptocurrencies too. I like Ether as well. But this idea of being able to trace it and it's transparent, and I'm not going to send it, and you're not going to be like, never mind, too bad, like the banks can do. So I think both have value in our society, and I think we need them both. That's my opinion. Someone asked about stable coins. I'm not sure if they didn't respond what they would like to know about, but I think that at least from my perspective, stable coins are extremely useful for transactions, but we need to remember that because they're stable, they're pegged to something. So if we're talking about USDC, it's pegged to the US dollar. So there is still inflation. It is still whatever it's pegged to is what it's pegged to. It's going to go up and down based upon that. So it is a different beast than Bitcoin in that there's a different component to it, and that it is backed by a company. Basically, USDC is a company circle. Yeah. Did anyone else? I know we're running over time. Did you guys have anything else you wanted to say about stable coins?
I would just say that they can solve some of the problems that we were talking about, right? Like the international transfers of money and stuff like that, right? Stable coins can address some of the things you were talking about, but to your point, Jess, they still represent traditional finance in many ways, or in most ways.
Mm-hmm. Yeah. Well, maybe we can do another stream somewhere on stablecoins if people want to learn more about it. Oh, they said, do you believe algorithmic stablecoins can ever truly achieve stability without external collateral, or are they fundamentally entropy-driven systems destined to collapse? Ooh, that is quite the question. And I actually do want to talk about it, but I know that our committee members need to leave. So to the person who wrote that, we'll do a stream more on stablecoins. Probably our CEP committee would be better suited for that, since most of them are off of Ether, and we can talk about USDC and USDT. But noted, I see your question, and we'll do something coming up related to stablecoins to share more about it. I know you guys have to go. Thank you for joining. I appreciate all of you taking the time. I hope that this helped illuminate why we care about Bitcoin and what the kind of global economic situation is related to issues with finance as a whole. So Rodney and Dirk, thank you so much for joining. I appreciate it. And thanks to everyone who's watching. And we will do another live stream probably in a month or two.
Yeah, a big shout out to like folks that wrote in and actually shared stories,
Yes.
people commenting while we're doing this. It's really nice to see folks out there, because like we're just talking to each other. We do this all the time, but to
Mhm.
see, to see humans on the outside interacting means a
And
lot.
around the
So thank you.
world.
Yeah, so I
Yeah,
love it.
around the
Yeah.
world to hear different stories that it's not one area, it's all areas that are struggling. So
Amazing.
absolutely. Thank you all so much.